Derivative. A financial instrument whose value is determined by the value of an underlying asset. Financial engineering. Combining derivatives to construct specialized financial arrangements. Hedging. An investment position intended to offset or reduce any substantial losses to an individual or an organization. Speculating. The act of trading an asset or conducting a financial transaction that has a significant risk of losing most or all of the initial outlay and expectation of substantial gain. Option. The right to buy or sell a particular good at a specified price during a limited time period. Strike or exercise price. The fixed price specified in the option contract at which the holder can buy or sell the underlying asset. Expiration date. An option usually has a limited life, the last day on which the option may be exercised. American options can be exercised at any time until the expiration date. European options can be exercised only on the expiration date. Option writer. The option seller. Option premium. Price paid to acquire the option. Time decay. Time value of an option decreases as its expiration date approaches and it becomes worthless after. Exercising an option. The owner of the option uses the option contract to acquire or dispose of the underlying asset. Option exercised if it is in the money. Call option. Gives the holder of the option the right to buy the underlying asset at the exercise price until the expiration date. The seller has an obligation to sell the underlying asset at that price and time. Put option. Gives the holder of the option the right to sell the underlying asset at the exercise price until the expiration date. The seller of the option has an obligation to buy the underlying asset at that price and time. Open interest. The number of contracts of each type currently outstanding. In the money for a call option. When the strike price is below the market price of the underlying asset. In the money for a pull option. when the strike price is above the market price of the underlying asset. Definition of in the money. It does not mean that the investor holding the option will profit, only that the option is worth exercising. Gains and losses buying stock. Unlimited gains, losses only as much as you're paid for the stock. Gains and losses shorting stock. Unlimited losses, gains only as much as you're paid for the stock. Gains and losses buying a call option. Unlimited gains, losses only as much as you're paid for the option contract. Gains and losses writing a call option. Unlimited losses, gains only as much as the buyer pays you for the option contract. Gains and losses buying a put option. Maximum gain equals exercise price $0 for stock price of contract. Maximum loss equals price of the contract. Gains and losses selling a put option. Unlimited losses, maximum gain equals price of the contract. Factors affecting option prices. Price of underlying asset, exercise price, time to expiration, volatility of underlying asset, risk-free interest rate, dividend on underlying asset. For examples of derivative securities: options, futures, forwards, and swaps. Futures contract. A contractual agreement, generally made on the trading floor of a futures exchange, to buy or sell a particular commodity or financial instrument at a predetermined price in the future. Two functions of futures markets: risk management and price discovery. Hedgers versus speculators. First tries to eliminate the volatility associated with the price of an asset, second tries to profit by betting on the direction in which an asset will be moving. Futures versus options. Futures carries an obligation to sell or buy. Options gives the investor the option but not the obligation to sell or buy. Marking to market. Collecting the daily gains or losses when futures prices increase or decrease. Forward contract. A tailor-made futures contract between two parties, private and not traded on the exchange. Currency swap. A contract to exchange one foreign currency for another in the future.